Wednesday, December 27th, market analysis, Stan Ehrlich, 10:02 California time. Good morning. This is a little bit past the middle of the trading day, and I always start out with the indexes, then go to usually futures or maybe some specialty situation like at the moment, the Santa Claus rally, which is profitable on all three trades at the moment. I'll show you in just a minute and start telling you when to get out, which would be starting next week. Now, the E-mini March futures contract is down very slightly momentarily. The actual index is up hardly anything, a few ticks. The DIA is a little bit higher, but small amount. And the Qs are down just a few ticks. Market's pretty quiet this morning, a little bit of bouncing around, but the range is very small. We have a doji at the moment, no higher high, no lower low than yesterday. And we have had minor new highs for the trend. So the bull market persists, which is fine with me because of the Santa Claus rally expectations, but not fine with me because of the overbought conditions and the sell signal last week. I am looking for a downside correction, Santa Claus or no Santa Claus rally, and then to new highs, which could, if it happens quickly, still occur and have the Santa Claus rally make money. Next chart is the S&P 500 daily data chart. Now, the comments I'm going to be making are about the same for these indexes at this point. And this is not necessarily true at all. In the past, there's many differences, but right now they all look extremely similar, which is, again, historical resistance, overbought conditions, the expectation that there should be a downside correction to some support and or close some gaps in every case. And the Santa Claus rally does allow for a bit of a dip before the first few days of January. So the next chart, and that's what I have to say about the spider. I think it's about to have a correction and get below the low made on December 20th. But I won't go too much further, I don't expect, and it won't last very long. And I'm still bullish intermediate to long term. Next, spider 1 minute chart. Since the opening this morning, around unchanged, it tried to make higher highs, couldn't do the job, slipped a little bit, minor new lows, rallied a little bit, tried to make a new high and couldn't do it for the day so far. And now it's back up to a very slight bit higher on the day, 27 cents. Nothing to speak of. Now, the DIA is a little different. We are poking at the highest high for the whole trend at this point. We're up 93 cents, not quite $1, which is, okay, not great. But now if it were to turn back down again, we could have a big reversal, but that's just not developing. And I've said that again and again and again for the last few weeks. Look at this. We got overbought starting in the middle of November. The overbought condition has persisted almost consistently every damn day up until finally December 20th, when it shook off the overbought condition. But we are almost back to overbought conditions again, extremely close. 75 is my overbought level, and we're at 74.78 at this tick, which is pretty much high and last. So in a few moments, literally, we may end up getting overbought again. Okay, next chart. And I'm getting an alarm here. Let's go see what this is all about. This happens to be on a different chart, and I will just kill the alarm real quick so it will not be bothering us and disable. There we go. Sorry about that. Now, getting back to our charts, the DIA, new highs, now overbought. Next, the Russell 2000, overbought again and again and again for the last month or more. Amazing, actually. The first time in a very long number of months and years that I've seen an overbought condition in the indexes like this persist for such a long period of time. So I'm still looking for a correction. I think it's going to be fairly sharp and quick, but I'm not bearish. Most bull markets, all I should say, bull markets have normal technical corrections. Sometimes it's a fib number, sometimes it's back to support areas, sometimes trend lines apply, gap closures, a variety of things to look for the bottom of a minor dip. Let's go to the next chart. Is the QQQ. Same commentary, as I said. There's a variety of reasons to expect these markets to have a dip back down, and they're just not doing it yet. And let's go to the NASDAQ futures contract, March. Overbought, same commentary, but got nothing to really add here. They're all just about in the same condition or extremely similar situation. And then we're going to see the 1 minute NASDAQ March futures, which is a little bit heavier than the other indexes at the moment. Okay, the Santa Claus rally. Ta-da! We just had a spike up in the spider. Therefore, the equity plots should be coming up like this. And I'll just move them real quick here for you. And all three entries at 7:05 a.m., 3 days before Christmas, December 20th, the same time of day, 2 days before Christmas, December 21, and last Friday, December 22, same time again, entry. 2 out of the 3 were not particularly of good price relative to what we've seen so far, but this wasn't too bad. And 1 out of the 3 was a much better entry. That's not necessarily the point. The point is, at this moment, you have an opportunity, if you've been doing any of these Santa Claus rallies, trades, to take a profit if you want, and or put a protective stop in to protect some sort of profit relatively close by. This support area was just about equal to the 2 highest entries, and I would consider 475, 475.10 or something, which would leave you with a tiny profit but no loss. And if you had bought on December 21, you'd have a very, very good profit. Now, when to get out? Tuesday, Wednesday, and Thursday of next week will be the first and second and third trading days of January. We will be getting out at the exact same time on those 3 days, and that is 6:45 a.m. California time. I repeat, next Tuesday, I believe that's going to be the 2nd of January, 3rd of January, 4th of January, and that is correct. Tuesday, Wednesday, Thursday of next week, the 2nd, 3rd, and 4th of January. We'll be getting out at 6:45, 15 minutes after the opening of our Santa Claus rally. Now, it doesn't matter which one you offset it, on which state. FIFO is a typical offset sequence, but in the end, it doesn't matter. The money is the same. So that's the Santa Claus rally. Here is a viable alternative for you. Instead of just plain getting out at 6:45 a.m. at the 2nd, 3rd, and 4th of January, put a trailing stop underneath the market. Therefore, if it turns around, which it might not, you'll be getting stopped out at a price that's acceptable to you. As the market moves higher, if it does, raise that stop periodically, and that periodically could be very, very frequent, minute by minute, hour by hour, at a minimum, probably day by day, until you're finally out of the trade. In some years past, and I've researched 25 years here, we've seen, and it's about 75% of the time profitable. 2 years ago was our best year, by the way. We made 4,000, I think it was 4,300, give or take a little, on all three trades combined. Last year, not so good, a few $100. This year, well, we're not out yet, so we'll see. It's working. What can I say? At this point, futures. E-mini from a different perspective. And by the way, don't forget you can contact me, comments, questions. If you want me to analyze a particular symbol, stock, commodity, forex, crypto, I don't care. Ask me, and I may put it on the YouTube market analysis recording. info@ersignals.com. That's where you can reach me. info@ersignals.com. So again, E-mini, not reversing. NASDAQ, overbought, again, not reversing. We're going to go to bonds, sharply higher, new high ground, overbought in a very broad area of resistance. I've talked about this being a long-term bull market. I believe it is, and we've heard what the Fed had to say, so it makes sense at this point. But I started talking about being bullish on October 23rd, when we had a bullish engulfing ER buy signal right smack at the bottom. That's why I developed this trading system to pick turning points, whether they be minor or major. And as you can see on my charts, anytime you see red or green, green being a buy signal, red being a sell signal, they are frequently, excuse me, at major turning points. There's a red one. There's another red one. Now, they didn't necessarily, that one did not work very well at all. This one worked very well. This one worked modestly. A buy signal lasted only a few days. A buy signal that only lasted a few days without much of a rally, but still a little bit. This was a whopper, and it's not finished yet. 10-year notes. Another one almost at the lowest low. Buy signal. We're still long. We have not gotten stopped out with the ER3 buy signal, and it's a new high ground now. Our equity plot should be going just like that. Looks great, but I'm warning you, we're overbought. Now, the head and shoulder bottom that we had before, we bought the bottom, the head of the formation. The minimum upside objective was, and it's now surpassed substantially, 112, 22 or 23, 30 seconds. And we actually got there on December 14th. So now a couple of weeks later, it appears we're going to have a new high close and new high ground completely. But again, be careful. This is an overbought condition. Don't go buying under these conditions. Normally, that's a big no-no. Look for sell signals. Next chart. Crude. Not much comment here. I think it's about to turn back down again. We came close to getting overbought, but no signals. Next. Also in natural gas, no signals. We got one on the top of the market. We got one just before a nice decline, just before a nice decline. Only a day or so of a decline. Just before a very nice decline, and just before a very nice rally. So although these were not hugely profitable signals like this one on the top, they had, profit potential in them and should have made some money. But nothing lately, just a severe oversold condition. Next, heating oil. Got oversold, rallied into resistance, and it looks like we're about to pull back down again and make a new low for the trend. Have to be intermediate to short-term bearish. Longer term, it's a little bit more difficult to say. Depends upon your time frame. You got a big sideways trading range for a couple of years here. So major, huge support, but it's way down here at 1.78, and we're at 2.62. So Lots of elbow room and profitable potential just in order to test support. If we were to get below these levels of 1.77, it would be very bearish long term. But let's see what happens. I'm slightly bearish at the moment. Next, gold, now overbought. Back into approximately the middle of the range of the bearish engulfing, which was the top of the market before about a week and a half, 2-week break, which was great. We picked the top, we picked the bottom. That's a bad signal. We lost a little money on that. We got the bottom, we got the top. We got another top back here. We got another bottom back in here. There are a couple of signals that lost a slight amount in the interim, but you know our yellow dot is our initial beginning stop order. If we get into the trade, that's our initial risk. And then that yellow dot will start to move when you turn on the strategy. This is just showing you the signal, which you can do what you want with. You may love just the signals and not necessarily want the automated strategy. Ask me. Next, silver. We got the top. We got the top almost. We got a good buy near the bottom. We got the high day. We got the high day. We got the high day. We got the low day. Lots of good signals this year in precious metals. For the moment, bullish engulfing. The implication is if we close higher, which it looks like we will, you're going to go up a little bit more. I can't rule out getting all the way back up to resistance of 25.7. That's possible, but we may get overbought and turned down before we get quite that strong. Next chart, platinum. Resistance area is approaching, and that would be around 1.02. 1,000, I'm sorry, and 20, that point. And that sounded funny for platinum. So I think we're about to turn down at resistance, getting overbought. Watch for sell signals at resistance. So we're about to turn down. Next, high-grade copper. Resistance area. Not quite overbought, but close. I think we're about to turn down again. I'm not getting a signal yet. I'm not saying go short. I don't have any signals. So I'm waiting for some definitive reason to do something, like a bearish engulfing on that high, like a bullish engulfing on these lows. So let's see what happens next. Soybeans. We are still long, just barely escaped getting stopped out on Friday of last week. Good rally yesterday, and today a little bit of a dip into support and coming back fairly nicely, although a hair lower on the day still. Could easily get to higher on the day and make a minor new high for a few days. But hey, we're long. We'll have a very small loss at the moment. Any strength is I look forward to. I happen to be intermediately friendly to bullish. This could develop into a very nice double bottom. So friendly to bullish. Soybean oil, oversold, ready to rally a little bit. Let's watch for signals. Next, meal. Not really much commentary, frankly. A little bearish, short term down, not oversold. Looks like it could make another new low. We did have a bullish engulfing on Friday, yesterday, Tuesday. At the moment, that's a doji, meaning an inside day and not particularly giving you much information about direction one way or the other. Corn. Minor little double bottom, maybe. Premature to say that. Gotta have to close over 494 in order to do it. Lots of resistance above the market. A variety of reasons to believe any rally that we might get is not going to go very far for very long. It looks like I'm a little tiny bit friendly, neutral to friendly, but longer term, intermediate, longer term, bearish. Trend is your friend. It is definitely down. Wheat, same basic commentary, lots of resistance overhead. Probably, if it can rally more, won't go far for very long, and looking for lower levels. Next, live cattle. We sold the high of the market with ER1 and ER3. Rode this trade all the way down to December 15th, when we actually, in the same day we got stopped out of our previous short, got a new buy signal. That doesn't happen very often. Got long the new buy signal, have a small profit as of yesterday's close, but right now it is a small loss, so the line should be red. And it's dipping into the middle of yesterday's bullish engulfing, not uncommon. I'm looking for a rally into new high ground probably this week. Next, live hogs. Support seems to be holding okay. It just hasn't gotten its rear end in gear yet. Look, minor new low today, but currently higher than yesterday's close in a support area. So I think it's going to rally a little. That's about it. OJ, wow. We caught the top of the market, well, on the first rally, on this particular rally high, October 31st, and it crashed for 3 days to support. Oversold, turned around. Great trade. Went all the way back up to a new high and did it again. Bearish engulfing, ER sell signal on the top of the market, got short. I've ridden this trade down, and it's currently about unchanged. We're down to 321. We're short initially at 414.90. And here's 321 last tick. It's oversold. It's a little bit below the bottom of the support area. I frankly expect it to rally. Maybe we're going to take a profit on this trade. Pardon me. My trailing stop is here, so cancel out. And that looks fantastic. Unbelievably great trade. Now, this was and still is an active head and shoulder top in progress. Remember that I had pinpointed what I thought was going to be the last shoulder high on December 13th. It happened on December 12th. And I thought it was going to be around 395 or 396. Instead, it was at 383 and a third. So I was just a little late one day and a little too high in price for the last shoulder timing and price. The patterns there, it worked very nicely with one minor hiccup, and that was a tiny bit of a false breakout that lasted about 3 days before the legitimate breakout, and slam dunk every day since that breakout. And now more than half of the downside objective has been fulfilled. Every day has been down. So I'm going to get down to, I expect 287.5. But don't go short here. You're oversold. Possibly it's going to rally up to about 393, and I might get stopped out if it does that. 339, I meant. So next chart, cocoa. Looking for a break. This market is rolling over ever so slowly. Not too much to say, except it's certainly losing momentum and starting to go pretty much sideways. And we're going to get to coffee. Support held after it was overbought, and now it's going to try to make a new high for the trend again. And I'm afraid that's what I've got to say. Support held, and it's bouncing out of it 2 or 3 days now very nicely. Next, sugar the sweet, probably in the process of bottoming out. Extremely oversold, and for quite a while. No reversals yet. Not going to get one today because we were not below yesterday's low. Otherwise, this would be green because we have a higher high, and it is higher on the day. But we never got lower than yesterday's lows. So that does not have a bullish engulfing. I like what I see. I think we're going to rally back up to about 22, or maybe a bit more than that. could be up to the major resistance at 23.6 next. And cotton the rag is bouncing slowly out of the resistance area again and again and again and again and again. So we're between a rock and a hard spot. What can I say? It could very easily go back up to 88, 89 again. And lastly, the E-mini still hanging on to a minor rally. If you want me to analyze a particular symbol, answer some questions you might have, email me at info@ersignals.com. You can have a great trading day. Happy New Year to you. Hope you had a great Christmas. Happy holidays.